Ever since the Bitcoin spot ETFs went live in January 2024, we've seen an absolute explosion in Bitcoin-based products hitting the US stock market. In fact, it's fair to say that this has kind of become Wall Street's Bitcoin loophole, or kind of something like that, because there's just so much development and so much money flowing in here, and there's so many ways to get involved. It's getting kind of confusing. Now, in case you're out of the loop on this particular corner of the Bitcoin economy, this video is for you. It's a very basic guide to what the heck's going on with Bitcoin in the stock market. Make sure to listen to the last part of the video because I'll give you my personal thoughts on how I'm currently viewing this space from a trading and investing perspective. Spoiler alert, nothing beats some Bitcoin sitting in a... Where's my cold wallet? There's a cold wallet here somewhere. Nothing beats Bitcoin sitting in your cold wallet. Let's dive right in. We'll be rocking a mind map for this video, so let's see how it goes. First, we've got Bitcoin, the original, the OG. I love it, you love it. Then we started complicating things in January 2024. You see, from there, we got US spot Bitcoin ETFs. Now, Canada and Brazil beat the USA to the punch, but obviously the US ones are the biggest ones because America, man. Now, as you know, these ETFs hold real Bitcoin, which means you get the exact same price as spot exposure, as if you were holding the real deal. BlackRock's IBIT is the most notable example. Now, let's say you want to ante up your exposure. Well, that's what the leveraged Bitcoin ETFs are for. These give you 2x leverage or inverse leverage to Bitcoin price. So if you want to 2x long exposure, you can do that with BITX. If you want 2x short exposure, you can do that with SBIT, SBIT. That's the ticker. Now, on the back end, these ETFs use Bitcoin futures on the CME to get leverage exposure. Now, next we have Bitcoin Treasury companies. Actually, one quick note on those Bitcoin spot ETFs, you have to pay a management fee, so it's a little more expensive than just holding it in your hardware wallet, which is free to do. If you hold it with BlackRock or Fidelity, they'll charge you a yearly management fee. And of course, there's all the questions about the trade-offs of security, personally versus custody risk, et cetera, et cetera. It's a whole giant story in of itself, but obviously the ETFs have been incredibly popular. Now, before we get into the Treasury company angle, it's a very interesting angle. Guys, if you're trading Bitcoin, Ethereum, Solana, frog coins, dog coins, whatever you want to trade, you should check out what's going on over on FEMX, OG cryptocurrency exchange. And here's the deal. These guys right now are offering no KYC on the exchange. So all you have to do is click the link down below. Doesn't matter where you live. You can sign up with no KYC, meaning you can just, anywhere in the world, use FEMX. You might need a VPN in some cases, FYI. Also, right now, they got a crazy $30,000, yes, up to $30,000 in deposit and trading bonuses. Obviously, the more you deposit, the more you get back in bonuses. The more you trade, the more you get back in bonuses. Hitting the top level for 30K obviously requires quite a bit of depositing and trading, but there's some great lower tiers too that you can grab advantage of. Link down below. Go check out what FEMX can offer for you today. Okay, publicly traded companies that hold truckloads of Bitcoin on their balance sheets. Now, as a result, these companies' stocks tend to be highly correlated with Bitcoin's private ones. We're particularly talking about stuff like MicroStrategy, not so much like Tesla or Square, which also have Bitcoin on the balance sheets, but don't really move with Bitcoin because they're much bigger than just having a little bit of Bitcoin in the balance sheets. Something like Strategy though, yes. Now we can split these companies into two broad groups, pure Bitcoin plays and traditional companies with Bitcoin reserves. So let's start with the latter. We have companies like Semler Scientific and GameStop that have cash flowing businesses that are separate and unrelated to Bitcoin, but they choose to keep Bitcoin on their balance sheets for marketing purposes, for hoping to pump their stocks, all that kind of stuff. And maybe you can make a third category for companies like Tesla, just happen to have a bit of Bitcoin as well. Not so much like Semler, which kind of is pumping based on the price of Bitcoin. Then there's the pure Bitcoin treasury plays. We have companies like Strategy. We have Jack Mallers 21, David Bailey's Nakamoto, Vivek Ramaswamy's Strive. These are companies whose sole purpose is to issue equity and debt to buy up as much Bitcoin as possible. I'm sure it's all going to end very well for all these guys. They're then attempting to create various financial products and instruments around their stack. So essentially, Bitcoin is their only play. The sole purpose of these companies is just to buy Bitcoin. Now, if you start digging into these companies, you'll want to be familiar with a few different metrics to help you evaluate them. The first is MNAV. MNAV. Now, that's the company's total market cap divided by the value of their Bitcoin holdings. So MNAV tells you how the market is valuing the company relative to its Bitcoin holdings. And MNAV greater than 1 means the market values the company for more than its Bitcoin stack for whatever reason. Strategy, for example, also does have another business beyond just holding Bitcoin. Now, while an MNAV of less than 1 means the market values the company for less than its stack of Bitcoin. And again, that could be for a whole variety of different reasons, toxic debt or something, for example. Now, there's the Bitcoin per share metric. This is the amount of the company's total Bitcoin holdings divided by their total outstanding shares. So this is going to tell you again how much Bitcoin exposure you're getting when you buy a single share of that company. Finally, there's Bitcoin yield. This is the percentage change between a company's Bitcoin holdings and their total shares. Now, this is coming straight from Bitcoin Magazine, but to understand Bitcoin yield, imagine there's a company with 10,000 Bitcoin and 100 million shares. We'll give a very easy example so you can understand here. A year later, that company has 12,000 Bitcoin and 105 million shares. Then your BTC yield, or the amount of Bitcoin per share, has increased, which is a good thing. So basically, Bitcoin yield tells you how well the company is able to increase its Bitcoin stack without having to print up a bunch of new shares, which of course dilutes the value of your shares in order to get that stack up. Now, there's some other metrics you can learn as well, but these are going to get you started well on your way. Now, if you want to do a deeper dive, then go pull up Bitcoin Magazine's How to Measure the Success of a Bitcoin Treasury Company article. Dive in, have fun. That'll be a good launch pad for you. Now, back to our conceptual overview of what the heck is happening with Bitcoin and Wall Street. Here's where things start to get interesting. This is with the products that are currently being built off of the Treasury companies. Okay, so it goes deeper. It's a real mess, guys. It's crazy, but there's money to be made within the craziness, okay? First, we've got the 2x leverage stock ETFs. Now, these are provided to give you 2x long or short exposure on select Bitcoin Treasury companies. So MSTX and MSTU, for example, provide a 2x long leverage strategy on Strategy, the company, MicroStrategy, the artist formerly known as MicroStrategy. Well, MSTZ provides a 2x short leverage for MicroStrategy stocks. Now, I must warn you, you've got to be extremely careful if you're trading these. First off, if MSTR trades at 2x to Bitcoin, then MSTX would probably be about a 4x on Bitcoin. Second, these are not 24/7 trading markets. So if you leave a position on one of these open overnight and Bitcoin makes a big move in the wrong direction, you can't react until markets open up, and you could be cooked in that situation. Your stop loss won't help because the damn markets are closed, man. So my point is, you better know what the heck you're doing and really research these products much more than just hearing about them in a video on YouTube before you put your money in them, okay? Use your stop losses. And of course, make sure to close your positions out before the trading day is done, or especially if we're going into like a long weekend or something. Next, we've got income generating ETFs. Now take note here that on the mind map, there's income generating ETFs for Bitcoin Treasury companies and the same for Bitcoin. So basically, these ETFs gives you exposure either to the company stock or to Bitcoin futures, and then pay you out a regular dividend on that, mostly from different options, premiums, and stuff like that. Now, we don't have the time in this video to get into options technicals, but just very simply, a TLDR, imagine an ETF that, again, gives you exposure to, say, strategy stocks, and then tries to generate regular dividend income because the ETF managers are selling options calls and options puts on the back end. But anyway, that's the high level idea what's happening there, and basically they then return yield that they make to you. So MSTY and IMST are two popular income ETFs for strategy. Then we have Maxi. This is one that's got direct exposure to Bitcoin futures and to US Treasuries. But remember, there is never a free lunch. You're always taking risk with this stuff. So the big risk with these products, of course, is something called NAV decay. So you want to research that if you are going to be doing the dive and putting your money into any of this stuff. Again, it all sounds great on the surface, but these are very complex financial instruments. We're presenting it here for you, but I don't got a lot of time to mess with this stuff, man. Just give me some good old classic Bitcoin. Anyway, if you're dabbling, again, research more than just a YouTube video to really understand what's going on here. This is just a general overview for you. Finally, we've got Bitcoin Treasury preferred stocks. The two notable examples are strategies STRK and STRF. By the way, I think as the treasury companies gain more popularity, companies like Nakamoto and Strive might issue out similar shares, so we'll see more of this stuff happening in the market. Strategies, the OGs, so it's got more exotic financial products built around it. Now, these preferred stocks give you exposure to the company plus a fixed dividend. Specifically, STRK pays an 8% annual dividend with a conversion option into strategy common stock, and STRF pays a 10% annual dividend with no conversion option. Okay, so if you want to stack MicroStrategy stock, and that's a pretty good way to do it. For what I've seen, the dividend payments come out of Strategy's general funds. It's a lot of stuff, man. It's crazy. It's crazy what Wall Street is building, like an infinite money glitch with all these damn Bitcoin products here. It's crazy. So that's the overview of the Wall Street Bitcoin loophole and how they're finding all kinds of innovative ways to latch their claws into exposure here. But I think this captures the majority of what's going on out there right now and the variety of different exotic products that are available if you so choose to dabble in that world. But I hope it brings you up to speed in case you're out of the loop. Now, this space is evolving really fast, so expect other types of products to start rolling out in the not-so-distant future. If they can make a buck on it, they're going to keep launching all this stuff, and obviously we have more companies coming all the time, more stuff happening all the time, so we're going to keep seeing more of this happening. Now, my thoughts on all this stuff. Look, these are interesting products. I don't currently own any Bitcoin treasury stock companies. I've got Marathon Digital Stocks, which owns a lot of Bitcoin. I have some Tesla stock, which obviously owns some Bitcoin as well. But these treasury companies have made some great gains, especially if you can buy them early enough. Early buyers of like Nakamoto and Jack Mallers made money. But the more these treasury companies launch, the more of them that come out, the more I believe that it makes sense to just hold Bitcoin and not any particular Bitcoin treasury stock. That's because the more of these companies that launch, the more the entire space becomes diluted. And what's going to benefit most from all these companies launching is the core asset itself. Bitcoin is going to see massive buying pressure. Now, to put it another way, if there's only one pure Bitcoin treasury play in the TradFi market, then there's probably a lot of value in owning that stock. But that's not the case anymore. That was MicroStrategy's situation for a few years. But what if there's 20, 100, which could happen? We could have 20 before you know it. Could have 100 in a year or two. As long as they keep making money and people keep making money off of it, people will keep doing it. At that point, there's a ton of demand for Bitcoin, but way too much supply of Bitcoin treasury stocks. Across all these different companies, it's going to be which one do you choose? What's really great? A lot of stuff's going to be overvalued. So again, the more of these companies that launch, the more I want Bitcoin. Not the companies, Bitcoin. Hope it makes sense because these companies are going to bring in huge buy pressure for the underlying asset. And look, personally, I'm open to making new trades on some of these new things when they launch. Fine. I haven't actually caught in because I always launch pre-market and I don't have a pre-market account. Whatever. It's fine. But there's money to be made there, and I'm not against making money on speculating on some of this stuff. But when it comes to long-term holds, the more corporate adoption that we get, the more I just want real Bitcoin. Why would you want anything else? Thanks for watching.